The world order is fracturing before our eyes at this very moment. And what just happened between Washington and Tehran is not the victory that Trump is going to sell you. The Tokyo Stock Exchange jumped by more than 4%, Seoul's by more than 5%. The euphoria was palpable. And then, in a few hours, everything flipped. Today, on June 27, 2026, the ceasefire is already technically violated by both sides. The 60-day window is weakened from its very first episode. But here is what nobody is telling you. The head of the Iranian delegation stated, in his own words, that this agreement acts as the failure of the United States. This is not a rhetorical formula. It is Tehran's official reading of what it just signed. In the next 24 minutes, I'm going to show you what the actual terms of this agreement reveal about the balance of the world, how 3 categories of lifted sanctions will redistribute tens of billions of dollars, and why a French financial operation that almost nobody noticed could be the most important event of this year for your wealth. Stay with me, because what is playing out behind the official headlines changes everything. On paper, everything looks like good news. In reality, the terms tell a completely different story. This memorandum of understanding was signed by Trump from Versailles and initialed electronically by the Iranian president on June 18, 2026, officially opening a 60-day negotiation period for a definitive agreement. The price of oil dropped back below $100 a barrel. For Asian economies massively dependent on hydrocarbons, it was a welcome respite. But behind this apparent relief hides a reality that is far more instructive for Washington. A reality that the Trump administration is working to mask behind a triumphalist smokescreen. And from the very first hours after the signing, this reality imposed itself with unexpected violence. Iran estimated that the American strikes of June 26th against its territory constituted a flagrant violation of the protocol. An oil tanker was hit by an unidentified projectile in the Strait of Hormuz. The Revolutionary Guards warned that their response would be swift and decisive. This is the precise context in which we must analyze what this agreement truly means for the world's balance. Because here is what the terms of this protocol really reveal about the balance of power. And it begins with a single word that Iran refuses to utter definitively. Iran commits to ensuring the safety of maritime passage without fees for 60 days. And after that, the question remains entirely open. Traffic will begin immediately, fully restored within 30 days once the strait is cleared of mines. But the head of the Iranian negotiating team, Mohammad Bagher Ghalibaf, Speaker of the Parliament, explicitly declared that the strait will not return to the pre-war situation. Take the time to measure what this means concretely. No fees for 60 days. And after that, Iran specified that it holds a right of sovereignty, that tolls will be collected for its services. The toll booth is still there. It is simply suspended temporarily to allow negotiations. Trump is obviously going to present all this as a historic victory. He will multiply publications in capital letters. He will call triumphant press conferences. But the actual terms of this agreement, favorable to Iran to the point that accepting them amounts to a deep strategic defeat for the United States, this is a truth that no one in Trump's entourage dares to formulate out loud. Let us look now at the concrete conditions, because this is where the global financial implications become absolutely gripping. Imagine Washington's most powerful geopolitical weapon for the past 4 decades. Now imagine that it has just been disarmed. In a single signature, the United States commits, in the event of a definitive agreement, to ending all types of sanctions against Iran, including those provided by UN Security Council resolutions, and all unilateral American sanctions, primary and secondary. Comprehend what this means in the real world. It is the end of the weapon of American sanctions as a lever of geopolitical pressure. This lever that Washington had been wielding for decades. All global banks will be able to deal with Iranian financial institutions again, without fearing retaliation from the U.S. Treasury. The BNP Paribas trauma, condemned to pay nearly $9 billion for maintaining relations with Iran, disappears. And here's the absolute geopolitical irony. In the event of a definitive agreement, the United States commits to facilitating the release of a $300 billion fund for the reconstruction of Iran. With American pressure on the Gulf monarchies to contribute to the bill, it is the Gulf states, historic allies of the United States, who will have to finance the reconstruction of their regional rival under American pressure. The geopolitical absurdity is total. Now, let us talk about the real financial consequences, because this is where the core of the analysis lies. 3 categories of sanctions are going to modify the entire global financial architecture. Oil, banks, frozen assets. 3 levers, and each one is worth tens of billions of dollars. First, oil. The lifting of sanctions on oil fleets will allow Iran to sell at full price, instead of selling at a discount with massive markdowns. Iran can produce more than 4.6 million barrels per day at full capacity. With control over the Hormuz corridor, it can offer its own crude at a reduced price, while charging tolls on Saudi and Emirati shipments. This is an extraordinarily powerful rent mechanism that no other regional power possesses. Iran holds the 3rd largest proven oil reserves in the world, more than 28 billion confirmed barrels. This is a structurally wealthy country that decades of sanctions had artificially maintained in poverty. This period of forced impoverishment is coming to an end, and the catch-up could be spectacular. Second, international banking reconnection. European, Asian, African, and Latin American banks will be able to re-establish relations with Iranian institutions. Sales to BRICS countries, and even certain European states short on supply, are going to explode. And third, this is the most explosive point: frozen assets. Iran lost access to tens of billions of dollars of assets immobilized in Western jurisdictions for decades. If these assets are released, we can expect a massive liquidity shock, and this money will not be reinvested in Western assets exposed to risks of future confiscation. Iran has learned the lesson from Russia in 2022, and it is precisely this point that changes everything for global financial markets. Because there is a consequence that nobody names directly. Iran never wants to depend on the dollar system again. Stop for a second. Everything I just showed you, the protocol, the sanctions, the 3 financial levers, that is the structure. What comes next is the deepest consequence. Because what Iran is preparing to do with its oil revenues will trigger a chain reaction. And one country, France, has just shown the entire world the instruction manual to protect themselves from it. If you are still here, what follows is probably the part of this video that touches your personal wealth most directly. Stay with me. Iran will henceforth seek to sell the totality of its oil outside the dollar system, and Russia and China are rejoicing, for perfectly rational reasons. Iran will trade massively with China, India, Russia, and all of the BRICS countries, in yuan, rupees, rubles, or cryptocurrency. A wealthy Iran freed from the dollar considerably strengthens the alternative bloc that China and Russia are seeking to build. It is precisely for this reason that they blocked the UN resolutions concerning Hormuz. This dynamic could force all of the Gulf monarchies to progressively de-dollarize their oil trade. Arabia has been discussing factoring a portion of its sales in yuan for several years. To satisfy its main Chinese client, if Hormuz definitively passes under Iranian influence with non-dollar currency invoicing, the pressure on Riyadh to take the step will become politically irresistible. The cascading consequences will inevitably ripple through global foreign exchange reserves. If fewer countries need to hold dollars to buy oil, fewer capitals flow toward U.S. Treasury bonds. It is precisely for this reason that gold prices rebounded spectacularly. Markets are realizing in real time that a paradigm shift is already underway. And with this gold rush comes an absolutely crucial question: where to store this gold safely, sheltered from any future confiscation. This is where the French operation becomes one of the most revealing events of this year. The Banque de France has just achieved something that almost nobody noticed, and it is probably the most elegant financial sleight of hand of the decade. The Banque de France finalized in January 2026 the replacement of 129 tons of gold stored with the Federal Reserve Bank of New York. 26 operations conducted between July 2025 and January 2026. France now holds the entirety of its 243 tons of gold in Paris, in a secure space called La Souterraine, located 27 meters deep. The operation is of remarkable financial ingenuity. Rather than physically transporting its bars, the Banque de France sold its old American stocks, pocketed the profits at the current very high market price, then repurchased equivalent bars on the European market. The result? A capital gain of 12.8 billion euros, allowing the Banque de France to post a net profit of 8.1 billion euros for 2025, after a loss of 7.7 billion the previous year. For the United States, this French operation is a geopolitical and financial nightmare. France has just delivered to the entire world the complete and legally flawless instruction manual to extract one's gold from the American orbit, without diplomatic confrontation, without endless negotiation, without exposure to retaliation. Washington cannot legally refuse to sell the French gold stored in its own vaults. It is a perfectly executed financial sleight of hand, and henceforth, every central bank in the world knows how to reproduce it. The French choice sparked reactions abroad, notably in Germany, where a portion of gold reserves still remains stored in the United States. Certain officials have relaunched the debate on the opportunity to repatriate their reserves. And even if France had made no net profit, the decision would still have been perfectly rational. Because what is building now is an entirely new global map of who holds what and where. 39,000 tons of gold, held collectively by the world's central banks, approximately 18% of the global available supply above ground, and its localization is rearranging. Singapore, which enjoys a reputation for exceptional neutrality and legal stability, is going to attract a growing share of global reserves. Other Asian financial centers will follow. And in this new geopolitical context, the big winner is unquestionably China. The more it accumulates gold in its own vaults, the more its financial system gains credibility. This is a virtuous circle for Beijing, and a vicious circle for Washington. Because meanwhile, the American economy itself is weakening, an economy that demands permanent expansion to remain viable. The Fed has just issued serious warnings about the job market. Household consumption, roughly 70% of U.S. GDP, cannot pick back up in a context of expensive energy and purchasing power eaten away by inflation. And here is the supreme irony of this entire situation. The United States is going to have to contribute to managing and securing maritime traffic in the Strait of Hormuz, that very same strait that Iran now controls. A colossal rent is going to generate in Iranian coffers. For Iran, the agreement acts as the failure of the United States. According to the very words of the head of its delegation, this is a truth that the Trump administration will strive never to utter publicly. But the markets themselves are not fooled by official communications. They read the actual terms of the agreements. Here is what I want to know from you directly. This ceasefire, victory or defeat for Trump? And do you think that central banks will accelerate their gold purchases in the coming months? Tell me in the comments. I read every contribution with attention. Here is what is coming next. This video showed you the fracture, how it opened, and what it reveals. The next analysis goes further into the global race to repatriate gold that is already beginning to take shape behind France, and what that means concretely for how you should think about your own wealth. Available very soon.